Hey traders, what's going on? Jamie Saettele here. It is April 17th, Monday, 2017. SB swing update here. I wanted to do a quick, I was writing the swing update and I said, you know what? It's actually easier for me to discuss the S&P 500 in a video just because there's kind of a lot of moving parts. All right. So first things first, I did do an update to some of the longer term charts over the weekend. And the major theme here is the same, and it has been for a long time. I do think that things are setting up for a massive top in May, and you can really see if you count the waves from the 2016 February low in the Dow and the S&P, it's really clear that this pullback would be wave 8. So you need one more high to make 9 up. All right, so over the weekend, with the sell-off late last week, we were thinking maybe we could get a deeper decline, and that's still a possibility. But after today's reversal, I just want to present a couple options. All right, so the big volume level that we have paid attention to from the 321 sell-off on SPX 500, the CFD is 2344. We're just about back to that level now. So we've, essentially erased some of the big negative implications, but this level still, I'd watch for resistance. And the major theme to me, as far as, the price action within, from the March high, are the three-wave drops and three-wave rallies. You can see it much easier on a 4-hour chart, right? So ABC, ABC, ABC. All these things are in three waves. Also, and again, still the possibility down the road that there's some sort of a move down to 2385 or 2298, but also the possibility that this is a triangle like we had kind of suspected it was, right? What I mean by that is wave A, wave B, wave C, which would be in line with the guidelines that have waves A and waves C relate by 0.618. You can see if I take wave A and extend it from the high of proposed wave C, the ending point is 2329, very near the low that we've made so far. So that gets us heading higher in proposed wave D, and to find what we would think, or what we think could be the end of proposed wave D, or the next top, we would do 618 of this rally, which gets us 2363. Okay, so 2363, a level to pay attention to for the next resistance. If you roll over again, then we're back on track for 2298, 2285. The thing, there's not a very big conviction call to be made here. The time to make the call is once you get, the triangle either completes with a wave D rally and then a wave E decline, at which point we'd be looking for a burst higher through the top, through the top of the range and into the bigger top. Or if things get panicky for whatever reason and you get a move down into the proposed, 2285, 2298 support zone. Right here, again, it's very middle of the range, and kind of too many options, too many possibilities to really get, conviction, make a high serious, high conviction call. I will say that looking at related markets like the Nikkei, which did crack the range, okay, we have put in a daily reversal today, and we're at the bottom of the channel. So from here in the Nikkei, it does look like you could get some sort of a base that forms. It's one up day, right, after a pretty serious horizontal break. Most recent high volume levels, 18,825 on Nikkei, which would be up towards channel resistance later this week, right? So just want to point out some potential positives here for so-called risk markets. You know, this actually goes hand in hand with gold, which we did do a video on yesterday. And if, you know, gold's at the new median line, and if we can expect, even allowing for a move to 1307, although it doesn't mean it has to happen, if we can get, excuse me, if we can get a, you know, a period of maybe 4 to 5 weeks of sideways to pull back in gold, it probably, you know, coincides with risk markets getting a little bit of a bump, maybe yen crosses as well, Nikkei, S&P, blah, blah, blah. So, yeah, that's that. So the major point of this video is that still moves in S&P are three waves, all right? And if we are indeed in this triangle from, or if you know, price action from March 1 is a triangle, probably going to see this rally carry up to 2363 over the next couple of days before you get any sort of relief. If, however, the S&P fails more or less at this, you know, kind of now, like 2344, which is the high volume level from 321, then I'd be open to the deeper pullback that into the levels that were described over the weekend and you know, last week prior. Okay. All right. So that's it. Again, S&P video. Hope it helps. And take care. Jamie Saettele here signing off with SB Trade Desk. Bye bye.